Hello and welcome to our video on the basics, investing in stocks. When it comes to investing, many people believe that it's all about crunching numbers and analyzing data. While these things are certainly important, there's another factor that plays a major role in investment decisions: emotions. In this video, we'll explore how emotions can impact investment decisions, the most common biases that investors face, and strategies for overcoming these biases. The impact of emotions on investment decisions. When it comes to investing, emotions can be a powerful force. Investors who are driven by fear, greed, or overconfidence can make poor investment decisions that can negatively impact their portfolios. For example, fear can cause investors to panic during a market downturn and sell off their assets at a loss. Greed, on the other hand, can lead investors to take on excessive risk in pursuit of high returns. Overconfidence can lead investors to ignore warning signs and make poor investment decisions. Common biases that affect investment decisions. There are several common biases that investors face, which can lead to poor investment decisions. Let's explore a few of them. Confirmation bias. This bias occurs when investors seek out information that confirms their existing beliefs and ignore information that contradicts them. For example, an investor who believes that a particular stock is undervalued may seek out news articles that support this belief and ignore articles that suggest otherwise. Anchoring bias. This bias occurs when investors rely too heavily on a single piece of information when making investment decisions. For example, an investor may anchor on a stock's current price and assume that it's a good buy simply because it's lower than it was a week ago. Herding bias. This bias occurs when investors follow the crowd and make investment decisions based on what others are doing. For example, an investor may buy a stock simply because it's popular, without considering whether it's a good long-term investment. So, what can investors do to overcome these biases and make more rational investment decisions? Here are a few strategies. Diversification can help reduce the impact of market volatility on your portfolio, and can help mitigate the impact of emotional decision-making. By setting a long-term investment plan and sticking to it, investors can avoid making rash decisions based on short-term market fluctuations. Rather than relying on emotional cues or hype, investors should focus on the fundamentals of the companies they invest in, such as revenue growth, profitability, and market share. Stay informed. By staying up to date on market trends and company news, investors can make more informed investment decisions and avoid falling prey to biases. One of the most important things to keep in mind when investing is to buy when prices are low and be careful when prices are high. This may sound simple, but it's a strategy that can be difficult to implement when emotions are running high. When prices are low, investors may be tempted to sell off their assets in a panic. However, this can be a mistake. When prices are low, it's often a good time to buy, as stocks and other assets may be undervalued. In fact, some of the best investment opportunities arise during market downturns, when prices are low and fear is high. Conversely, when prices are high, investors should be cautious. This is often a time when emotions like greed and overconfidence can take over, leading investors to take on excessive risk and make poor investment decisions. When prices are high, it's important to focus on fundamentals like earnings growth and valuation, and to be wary of investments that seem overpriced. Emotions can play a powerful role in investment decisions, and investors who don't manage their emotions effectively can make poor investment decisions. By understanding common biases and developing strategies for overcoming them, investors can make more rational and informed investment decisions that lead to long-term success. That's it for today, folks. Like and subscribe for more content like this.